I'm Cynthia Rowland, and this is episode 155 of EO Radio Show. Today, I want to refresh episode 41, which addresses the nonprofit basics topic of filing deadlines for nonprofit organizations. We cover both federal and state filing deadline requirements, and lucky for our listeners this year, I'm actually getting this episode up before the deadline, which is May 15th. Be sure to check the show notes for a number of resources for both federal and California filing deadlines. But if you're in a state other than California and you suspect you have filing requirements in that state, be sure to check out our nonprofit state filings playlist where we cover all 50 states and the District of Columbia's filing requirements. Welcome to the EO Radio Show, your nonprofit legal resource. Brought to you by the Exempt Organizations Group at Farella, Braun & Martel. My name is Cynthia Rowland, and I'm a partner at Farella. I'm a business and tax lawyer with more than 30 years of experience advising clients on nonprofit and charity law. Through this podcast, our lawyers and guests will discuss a range of legal and business issues impacting the nonprofit world because we understand you work hard every day to make your community a better place to live and do business. Many of our programs focus on the basics, and at times we'll do a deep dive into narrow and complicated legal issues. Again, welcome to the EO Radio Show. We're glad you're here. Most charitable organizations, that is, those exempt under Internal Revenue Code 501c3, are required to file an annual information return known as the IRS Form 990. This form is filed with the IRS every year, and there are a few important exceptions for types of organizations that are not required to file. So the organizations that don't file Form 990 include church organizations, and that includes a church, an interchurch organization of local units of a church, a convention or association of churches, the integrated auxiliaries of churches, church-affiliated organizations that manage the funds or maintain retirement programs for the church, a school below college level affiliated with a church or operated by a religious order, church-affiliated mission societies if more than half their activities are conducted in or are directed at persons in foreign countries, exclusively religious activities of any religious order. So those are all the church-related organizations that don't file Form 990. Also, state institutions don't file a Form 990. That is a state organization whose income is excluded under Internal Revenue Code Section 115. Governmental units or affiliates of governmental units also are not required to file a 990, even though they may technically be described in Internal Revenue Code 501c3. Several other special types of organizations have somewhat unique filing requirements. These include private foundations. They don't file the Form 990. They file a different form. It's different in many, many respects. And that's the Form 990-PF for Return of Private Foundation. As you can see, size matters in terms of which 990 is filed. Organizations that normally have $50,000 or more in gross receipts and that are required to file, that is, the organizations that are not church and church-related entities or governmental units, those organizations either file the Form 990 or the 990-EZ, which is a short form return. Then the very small organizations, as I mentioned, those whose annual gross receipts are normally less than $50,000, don't file an annual return, but instead file an electronic notice, that is the Form 990-N, which is also known as the e-postcard. So technically, those very small organizations with receipts less than $50,000 don't actually file the 990 information return, but just a postcard. So thinking about the organizations that are required to file the 990 information return, that return is due on the 15th day of the 5th month after the end of the organization's fiscal year. So, for example, the return of an organization whose fiscal year ends on June 30 would be due on November 15 of that same year. For calendar year organizations, May 15th is the magic date. The due date may be extended for 6 months without a particular reason or showing cause, simply by filing IRS Form 8868 before the original due date. An organization is allowed one extension of 6 months. So for calendar year nonprofits that are required to file a 990, the last deadline, assuming they have properly filed the request for an extension, is November 15. The due date can also be extended in areas that have suffered a disaster as declared by the federal government. The current list of eligible localities and other details for each federally declared disaster are always available on the Tax Relief in Disaster Situations page on the irs.gov website. These disaster relief provisions typically postpone various tax filing and payment deadlines and may apply to individual income tax returns, business returns, as well as tax-exempt organization information returns. The Disaster Assistance and Emergency Relief for Individuals and Businesses page on the IRS website has details on the returns, payments, and tax-related actions that qualify for the additional time when a disaster is declared. Taxpayers in the affected areas don't have to file any extension requests, and they don't need to call the IRS to qualify for extended. But with all that being said, a charity may well be advised to file the extension request, that is, the Form 8868, even if they are covered by an automatic extension for a qualified disaster. This may be important for state filing requirements, since many states extend their filing deadlines applicable to nonprofits, but only if the federal extension has been requested timely, and there may or may not be an automatic extension for a disaster in the other state. Because the Form 8868, that is the extension request, is so simple to file, consider filing it even if you think you are covered by the disaster relief. Now, let's talk a little bit about what happens if an organization fails to file a required return by the due date, including any properly requested extensions of time. At the federal level, the organization that missed the deadline must pay a penalty of $20 per day for each day the return is late. The same penalty applies if the organization doesn't give all the information required on the return or gives incorrect information. Note that using a paid return preparer doesn't relieve the organization of its responsibility to file the complete and accurate return, and the penalties can still apply even if it's your paid return preparer's fault that it didn't get filed. There are maximum penalty amounts that are adjusted for inflation each year. So in general, the maximum penalty for any failure to file is the lesser of $10,500 or 5% of the organization's gross receipts for the year. Higher penalty amounts apply for larger organizations. So the inflation-adjusted amount now for returns required to be filed in 2022 for an organization that has gross receipts over $1,094,500 for 2022, the failure to file penalty is $105 per day, up to a maximum of $54,500. So that's a lot of money in penalties that can add up if the organization, particularly a large organization, fails to file a return. If an organization is subject to the failure to file penalty, the IRS can specify, and this usually happens if there's an audit or an automatic audit, the IRS may specify a date by which the return of correct information must be filed. And if the return is not filed by the date specified by the IRS, even an individual within the organization who fails to comply can be charged with a personal penalty. The maximum penalty on individuals for failure to file in this scenario won't exceed $5,000, but still, you don't want to get into that situation. Note that the penalties for failure to file can be abated if the organization has reasonable cause for failure to file the timely, complete, and accurate form. Often we request abatement when the failure to file or the incomplete filing is in fact the fault of a paid return preparer. But the organization has to establish reasonable cause, and it's a lot of work to get the IRS to abate the penalties. So shifting gears a little bit, keep in mind also that the states where your nonprofit is operating may require an annual report or income tax return. For example, nonprofits operating in California file with the California Franchise Tax Board, and they also file a separate form with the California Registry of Charitable Trusts. Both of those forms are ordinarily due at the same time as the federal Form 990 and allow for the same extension of time, but only if the federal extension is timely requested. Failure to file in states where an annual filing is required can also lead to penalties and other unpleasant consequences in those states. Finally, there's also that ultimate penalty on nonprofits who fail to file the required federal returns. For charities that are required to file Form 990 or 990PF, if the organization fails to file for 3 consecutive years, it will automatically have its tax-exempt status revoked. This is a big deal for charities. Organizations whose tax-exempt status was automatically revoked can apply for reinstatement of their tax-exempt status. But that's a big project, and it's a bigger topic that I'll cover in a future episode. For curious listeners, I'll link to some reinstatement resources in the show notes, along with a lot of other links to IRS forms, instructions, and useful IRS sites to get you on your way to meeting your federal filing requirement for this year. And be sure to check your local state filing requirements in all the states where you're operating so that you manage to file extensions and stay in compliance in those states as well. So that's all for this episode. I'm Cynthia Rowland, and you've been listening to EO Radio Show, your nonprofit legal resource brought to you by the Exempt Organizations Group at Farella, Braun & Martel. If you have suggestions for topics you would like for us to discuss, please email us at eoradioshow@fbm.com. That's eoradioshow@fbm.com. Thank you for joining us. Until next time, make a difference.